The higher we go, the harder we fall. We are in quite a pullback and the sky is seemingly falling. I've got people in the streets screaming. They're asking me if they should sell everything. The same is the happening across equities and cryptos. But does that mean that we have lower to go? Perhaps. We pulled back quite a bit in Bitcoin. I was expecting a pullback, as I've been posting about over the past several days, and we got that pullback. And I almost want to say it's too deep to be a legit pullback for a wave two, but honestly, we haven't really broken support yet. Typically, you don't want to go below a 61.8% retrace. That is what I have highlighted here, but we have broken that. We have the 76.4% retrace right below us. Again, this is Bitcoin 36,951. We haven't broken that yet, and we're starting to see some MACD divergences. We have a bit of a rally in place. Is this the bottom? Are we done? Not sure yet. I have reason to believe that we do, because equities are also looking like they're about to turn around. When we look at Ethereum, the situation is a little bit less concrete. We did break our 76.4% retrace slightly, but we've rebounded just as sharply. And this has continued the theme of where Ethereum often follows Bitcoin, but in more exaggerated fashion. So we pull back harder, we rally harder, so on and so forth. So either way, we're seeing some signs of bottoming here. When we look at altcoins, I'm going to look at Bitcoin Cash real quick. Same thing, extraordinarily deep retrace, almost too deep to be a wave two. But by the book, by Elliott wave theory, your rally does not invalidate until you go back down below the point of origin. So in the case of Bitcoin Cash 260, Bitcoin, it's sitting at 34,300, something like that. It is whatever our lows were on February 22nd to 24th. That is our low point. So as long as we stay beyond that, I'm going to maintain my bullish bias. If we break it, on the other hand, that is what this invalidation is indicating. We would fall into the boxes lower down, which we're going to look at in just a second. So this is the bigger picture chart. I have Ethereum here. We'll just go ahead and start with it since it's up. And we look at this rally since that bottom on February 24th. This looks like an impulse, clean, relatively clean. We extend a little high for our fifth wave here, but this is convincing enough proportion-wise. When we look at Bitcoin, it's not as, well, it's a bit more ominous. We rallied so high. This does look like a zigzag up. Looks like a three-wave pattern, an ABC. So this would make it more convincing that we're going down. But when we look at the internal structures, it could go either way just because of the rest of the crypto space. It does look like five waves up to me. You never know. Maybe we just had an extensive fifth of extension. We've, again, pulled back pretty deep. We're actually not as close to validation in Bitcoin, despite this, as we're in Ethereum. And again, that adage goes, the higher you go, the harder you fall. That's what we're seeing. I'm looking at this more as if we just extended really high. So we're going to have a stronger pullback, which, you know, if we only rallied up to about right here, 45,000, I'm sorry, not 45,000, but maybe up to about 45 or so, 42, actually 42, we would have pulled back here anyway for a standard 61.4, 61.8% retrace. Either way, we're going to come back to this level most likely. It's just so that we just got a little ahead of ourselves. That's all that I'm seeing here. What's next? Well, we should be seeing a rebound relatively quickly. As I mentioned, we do see some patterns in the big picture as well as in equities and in the stock market. Oversold, we're looking like we're getting into a bottoming retracement range. When we look at our MACDs, we're going to see some divergences. Let me shift it back to Bitcoin Cash here. You can see I put this line here. So as we got lower lows, our MACD has looked less and less oversold. Ethereum Classic, same kind of thing. You see an upward trend. Switch over to Dash over here. When we look at Dash, same thing. Less and less oversold. And Polkadot, same thing, divergence. So you can see that recurring theme was Chainlink, a couple of the other bigger ones here, EOS. Basically, all of them are showing a divergence. So if anything, these are all signs that this might be the bottom when they've just passed it, at least the secondary bottom or wave two bottom. Otherwise, we could see that lower low. But as I mentioned, we've already come down so low that we wouldn't go too much lower than we've already gone. This is the Ethereum chart. I'm actually shift back to this view here. As I mentioned, we did have that 24K handle in Bitcoin that I really don't see us falling down to. I have a kind of a hard stop at about 28, 29K. That was our low in the middle of the summer of last year. I could see us going down there. I'm not convinced we'd fall into this blue box if we did invalidate. So again, if we broke that origin point of our rally, that's where I would target us as heading. So we could get in that box, but more than likely we'd stop a little short, probably in the upper 20s range. I don't see us going too much lower. Ethereum, same kind of thing. I said my ideal retracement point would be about the 1700 mark if we have that lower low, but I can't see us going too much lower than 1900, maybe a floor at 1700, just because that's about where we fell in the past. Now, if you're wondering how I could still be bullish despite this death and destruction we're seeing, this is nothing new in cryptos. Cryptos are, well, they're famously quite volatile. They have big swings up and down. You often see blow-off extensions as well as deep retracements that make you lose all hope, and that is just the nature of cryptos. If you've traded metals, they operate very similarly, especially silver. You see delayed rallies that go crazy. They overextend, and then you have insane retraces later on. And I'm actually shifting back here to the beginning of this current larger pattern in March of 2020. And you can kind of see here how we had some deep retraces. Is this really a 1-2 here? It doesn't look like a traditional impulsive structure. Was this whole thing the first wave? Well, that looks awful lot like an ABC to me, but you would expect a lower low. Instead, we just kept taking off. We went sideways, but we had what we call a melt up and just melted up for a long time. We went from, what is it? We retraced about 5684 all up to 10,000 something in a matter of months. And well, the blow off hadn't started yet. But that's history now. So what I'm saying is that this kind of a transition point is not at all unprecedented. You can see how we've had spike downs before we had long rallies. You often don't get a very clean impulsive setup. You don't get that 5 waves up and 3 waves down structure that we look for. So again, we would look for that structure 1, 2, 3, 4, 5, followed by 3 waves down and then take off. We do have that on the small scale picture a little bit, but like I just mentioned, we had a deep retrace. Is this a blow off 5th wave? Could be. So again, no reason to panic sell, because even if we do go lower, it'll probably be very short-lived. It'll be a spike down. And expecting somewhat of a reversal across other asset classes as well. And just for the fun of it, I'd almost gather that maybe oil will reverse too. Maybe oil will actually pull down. I know I'm hearing calls for $7 gasoline out there, at least in the southern US and Texas. I think the average is well over $4 right now nationwide. And that is tied to oil prices, but nothing moves linearly, nothing goes up forever. Let's see what happens. At some point, the buyers and the sellers get exhausted and sentiment shifts. So going to see what's going on. I'm going to have more detailed projections of where I expect our altcoins to go. So stay tuned for that. Don't forget to subscribe. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.